Let's get to the trader rundown now with Michele Schneider, the Director of Research at Market Gauge. Good to have you with us. And for so long, Michele, it was all about big tech and some popular names. But now a lot of people are talking about the emerging markets. What do you think here?
Well, I think there's a couple of reasons for that. One would be the fact that they're very commodity related. And so we've had big moves in the gold in particular, but even some of the other metals are starting to do well, copper and palladium. And we are also looking at some of the grains, particularly soybeans, has moved up a lot. Wheat and corn have tried. So that's going to be good for emerging markets. And the other reason is because of the US dollar being weaker, also good for emerging markets.
What would be a potential play here? Perhaps an ETF that you like?
Well, with China, FXI, and EEM, which is the overall emerging markets ETF, flying, which of course would put the risk really somewhat out of control. I've been looking at Vietnam. We already have skin in the game. That ETF is VNM. And there's a few reasons. They have done very well industrially. They're a growing economy. And in terms of their handling of the COVID, they have no cases and they've had 0 deaths, even when the rest of the world was peaking. So I think that's a good play with still a very decent risk.
Before you take off, I know as a trader, you are very focused on what's happening with the banks and the retail sector. What's the update?
Well, that's, again, we've talked about this, the inside of the market. That's really going to give you your key in terms of how much we can really expect the U.S. economy to grow. The banking sector is important and it's lagging. The retail sector is encouraging and remains encouraging. But with that XLF or that financial sector still underperforming here, the concern really is going to be about what's going on in terms of the money, how much people are actually taking out of the bank to improve their own economy, let alone the U.S. economy. And even though consumers are spending, that could be a temporary blip. So what we really want at this point now is to see some real signs of banking and retail holding up. And then I think that would be very encouraging for the overall U.S. market.
Michele, always a pleasure. Thank you so much.
Thank you so much, Angie. Thanks for having me.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.